Welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. In this video, we're going to talk about the differences between term life insurance and whole life insurance. So insurance is one of those things in life that's pretty much necessary because, well, life happens. I could finish recording this video right now, go for a bike ride and get hit by a car, and that's that. Whiteboard Finance is over. Even though I'd like to think that my audience would create a Facebook memorial page and share my videos into eternity, but we all know that probably wouldn't happen. So the fact is that we're all eventually going to need life insurance at one point or another all throughout our lives. So in this video, I'm going to go over the differences between term and whole life insurance. Before I get into that, however, I'm actually excited to announce that I did decide to make this a sponsored video. Today's sponsor is SimpliSafe. It's an excellent home security system that's completely wireless. And the only reason I'm recommending it is because I use it myself. If I didn't use it myself and know and trust it, I would not make this a sponsored video. So check that out right now. Hey everybody, so I just wanted to introduce the SimpliSafe system. It is essentially an incredibly effective, reliable home security system that will make sure your home is safe. So basically your home is professionally monitored 24/7, so if anything happens, they'll make sure the police get called. So this thing is kind of like the brains of the operation here, okay? So there's a lot of really thoughtful features. So you can see here that there's a little sensor up here, so if the glass gets shattered, it automatically notifies the authorities and this thing starts ringing like an alarm. There's also really cool features like these little sensors here that go to the window. So if this is lifted or separated while it's being monitored, that will also notify the alarm. So essentially you're covered. It's really easy and intuitive to use. All you have to do is just put in your PIN on this pad right here. So it's just like any other home security system. So the pricing is pretty fair and honest. It's only 50 cents a day with no contract and you can cancel anytime. So the nice thing is that it's equipped for the worst case scenarios. So in case you lose Wi-Fi or power, so this is my Ethernet cord going into my router right there. If that gets cut or broken, this thing will still work. So it's equipped in case the system is attacked, if you lose power or if you lose Wi-Fi. So the reason why I decided to go with this SimpliSafe was because I read a lot of reviews and I know and trust it. This is essentially my business right here. This is my full-time income. So I need to be able to protect this system at all times. The nice thing about this system is that every single sensor that you see that comes with this thing is very sleek and small. So it's not obtrusive. All these sensors, you can barely even see them. So here's the one that detects if your thermostat stops working, if the temperature gets below a certain temperature, that will actually notify it. So ultimately, this process, I know it looks kind of complicated, but it couldn't have been any easier. All these devices come with a sticky back on them, and they're literally just stuck to the wall. So it's all wireless, the whole system, which I think is really cool. So ultimately, just wanted to recommend a product that I like and use. Again, sponsorships come very rarely onto this channel. So if I am recommending something, I definitely use it and love it. Thanks, guys. Okay, so what is term life insurance, okay? Term life insurance provides coverage typically for a set period of time, and most people go with 20 to 30 years on this, okay? You can go less, you can go more, it all depends on what you want and what suits your needs. So if you or your spouse passes away during this time here, you are then paid the benefit of whatever the policy is. So if the policy is worth, let's call it $500,000, you croak within these 20 to 30 years of whenever the policy is. Your beneficiaries, it's usually your spouse or your children or whoever you assign as the beneficiaries, will get this payout, period. So the nice thing about term life insurance is that it's very affordable, okay? It's actually much more affordable than whole life. So typically, this works out to be for every $7 in term life insurance for, let's call it a 20-year coverage period, you're probably going to be paying closer to $100 in whole life insurance for a 20-year period. Okay, that's just how the premiums shake out, and I'll get into that more in depth later. So term life insurance has no cash value. Okay, so you're not paying into any premiums, you're not investing any money. So as mentioned before, let's use that $500,000 as an example. You pay a set amount per month. Let's just call it, I don't know, 20 bucks for that. It's probably going to be a little bit more. but you pay 20, 30 bucks per month, you get this amount of coverage, whatever that coverage is, and that's it. You're not building anything, you're not investing that money, you're not making any interest on that money. Think of it like car insurance. You're just paying a set amount per month to get a certain amount of coverage, okay? So this is actually not worth anything until you actually need it, okay? But that's actually the whole point of insurance, so that's not necessarily a bad thing. So the pros that come with term life insurance is that it's a great choice for people that are looking to, how do I say this, replace their income. So let's say income replacement, okay? So if you're someone who has a family of 4 and you're making 50 grand a year, you should typically have something that covers about 10 to 12 times your annual salary. So in the event of your death, your spouse or whoever your beneficiary is can take that lump sum, invest it in the market, and hopefully live off the interest that would have been paid to you as your salary, okay? So this is also good for debt payoff. And what I mean by that is that the premiums are much lower than whole life insurance, so you can actually use this to put down towards debt and pay off your debts and get out of debt, okay? And then finally, this doesn't apply to most people watching this video, but business policies, term life insurance is great. So if you have like a key person that's within an organization and they pass away, the organization or whoever the beneficiary is will realize that insurance policy. So let's talk about the cons of term life insurance. So this is one of the biggest ones. It's costly to renew. The reason for that is if you use the example of the 30-year-old that gets a 30-year policy and he still needs it, say like he's still in debt or whatever, his finances aren't in order and he still needs to work. If he goes to renew this policy at 60 years old, it's obviously going to be a lot more expensive than when he was 30. When you're 30, you have a lot more life to live, you're generally healthier, there's less health risks. When you get older, obviously you have less time to live, meaning the policy has a higher chance of being paid out, which means that the numbers have to work for the insurance company. So that was the cons of term life insurance. Let's get into whole life insurance. So what is whole life insurance? So whole life has 3 components that we need to talk about, and this is what differentiates it from term. The first one are the premiums that you pay. So there's both premiums, obviously, in the term. That was the $7 versus the $100. So there has to be a reason why the whole is so much more. Why is it $100? So the premiums are the first component. The second is the death benefit. Okay, this is just what it sounds like. This is the amount that you're paid upon your death. So let's just call it 500 grand for easy numbers. And then finally, this is the kicker. This is what differentiates whole versus term. And that's the cash value. And I'll put a dollar sign here. So the cash value is pretty much what gets accumulated and what these salespeople, the sales agents or the insurance agents try and sell you on. It's kind of like the savings component or the investment component of a whole life cash value policy, okay? So when you pay your premium, the money that you pay, remember this $700 and $100 a month? Obviously, a big part of that is going towards actually funding the death benefit for like the first 5 to 10 years, okay? Also, where these premiums are going in the beginning, they're not going towards your cash value, which you're led to believe. A very small amount is going towards the cash value. A majority of these premiums are going towards the commissions of the salesperson, so that's why they always try and push whole versus term. They're also going to the administrative fees of actually running the policy, and they're also going, like I said, to actually fuel or fund the death benefit, okay? So you're led to believe that, oh, if you have a cash value whole life insurance policy, you're going to make 10, 11% in the market, it's going to grow, and it's going to be tax deferred, and that's going to be your money, right? Well, actually, that's incorrect. After all the fees and all that stuff is said and done, you're typically averaging 1.5% on a whole life policy. Okay, let me repeat that. 1.5% to 2.2%. After you've paid into this death benefit for like 5 to 10 years, that cash value starts to build more and more based off the premiums that you're funding it with, okay? So beneficiaries, here's the big kicker. Beneficiaries are only entitled to the death benefit when you pass away, okay? When you pass away, the cash value that you've built up this whole time, that's the whole thing that you've been being sold on this whole time, goes away, okay? This gets absorbed by the life insurance company, believe it or not. this does not go to your beneficiaries, okay? So if you have a $500,000 policy, that goes to your beneficiaries, okay? The cash value does not. That goes back to the insurance company. So all this money that you saved, this $93 difference between the 7 and the 100, that $93 difference that you've been saving month after month after month after month, it does not go to your beneficiaries. It goes back to whoever your provider is, okay? The other thing is with whole life insurance, you have no choice in how the life insurance company applies the premium, okay? So when we talked about the premium for the first 5-10 years going towards a majority of the death benefit, the commissions and the fees, you can't choose what percentage of that goes to the cash value. It's basically whatever their policy says and whatever those underwriters and analysts have decided. So the thing is, you can actually, the only way to get this money right here, the cash value, is to cancel the policy and surrender your policy. So you lose the death benefit and then they'll cut you a check for whatever that cash value was. So you're losing your insurance, that's the whole point of getting insurance, just to get your money back that grew at a very poor rate, that 1.5 to 2.2%. So it sounds like I've been talking a lot of smack about the whole life policy. There are a couple different benefits here. That cash value portion is non-taxable as long as it doesn't exceed the total premiums that you paid. Okay, so if you paid, let's just call it 100 grand in premiums, as long as this cash value isn't above 100 grand, it's not taxable. Anything above that 100 grand is taxable, okay? So very quickly, let's just go over a quick recap of the pros of the whole life insurance, and then we'll do a quick recap of the cons, and then I'll get into a dollar comparison, if you will. So the pros of the whole life insurance is that you have coverage for life. It's not set to that 20, 30 years like we talked about in the term policy, okay? This is covered until the day you die, right? You can do that because, again, your family